Okay, when it comes to the African data center market, I guess it'd be good to understand what the current size is, and I guess like everywhere else in the world, potentially there's a lot of likely expansion predicted. So, is that the case? And if so, what are some of the driving factors?
The thing that I guess with the size of the market is that there are different ways of measuring or defining the market. And I guess whether you do it by measuring equity invested, construction spend, the revenues generated in the market, or enterprise value, we can look at various industry reports, and they forecast that today's African data center market can expect high single digits to mid-teens compounded annual growth rates, depending on the segment. And that's roughly 2 to 3 times growth by 2030. And I think the key drivers there are cloud and hyperscaler expansion, rising local demand, so that's mobile data, fintech, payments, streaming, submarine cables and interconnection, and major investments in energy and PPAs to resolve power constraints. So if we look, for example, at the strategies of the hyperscalers and cloud providers, people like AWS, Microsoft, and Google, they all have regional strategies for Africa. And also local entrants are driving large capex, as well as demand for interconnection and sovereign data hosting. We're seeing a rapid surge, I would say, in data traffic and digital services on the continent. So, as I mentioned, you've got mobile broadband, streaming, fintech, and payments. So, people like Visa have opened their first African data center, which is a good example of verticals localizing infrastructure. And local transaction volumes and latency requirements are pushing on continent capacity. Also, on subsea cables, more cable capacity lowers transit costs, and that centralizes demand at landing sites, which can create metro data hubs. And this increases the value of interconnection-focused co-location facilities. On the finance side, investment and development finance are important. We see a commitment from multilaterals, so DFIs, as well as private equity and strategic buyers. And crucially, they're willing to underwrite rollout risk, which accelerates the development of projects in markets that would otherwise or previously have been considered too risky. On the energy side, the increased use of PPAs is important, as well as use of on-site renewables, which in turn can have a beneficial effect by helping to create local microgrids. And because grid reliability is a persistent constraint. So data center operators do invest in solar, in battery electric storage, and also dedicated PPAs with local generators. And that's to guarantee uptime, of course, and helps to manage total cost of ownership, which also enables new projects to proceed. The regulatory environment is important. So data sovereignty requirements mean that there is increased structural demand within the system, and governments and large enterprises prefer local data storage. So that's both for compliance reasons, but also in terms of security and performance. And then finally, less so, I would say, in Africa, but edge computing and telco clouds, you can see that increasingly will be a factor. So you've got 5G rollouts, content delivery, latency sensitive applications, and that will push in that specific areas, especially across metro hubs.
Okay, and perhaps just adding to that, I can ask, I mean, the world's gone AI crazy. Is that the same in Africa, or is that not as having as big an impact there as it is in other places?
It's hard to say. So in terms of the developers of specific projects, I guess this partly then leads to the question of who it is that's developing projects there. And I would say across the continent, it's still largely the case that it's co-located projects rather than hyperscalers that we're seeing in the market. So that's for a number of reasons. The shift towards hyperscalers, especially for self-build, requires reliable power because they've got high density cooling. They also require regulatory clarity and network connectivity, and that remains constrained in many African countries. And I would say that for the reasons that we've touched on with data sovereignty and the regulatory requirements, that will continue to favour co-location for local hosting. So even for the big cloud players, I think they're more likely to end up in probably a hybrid type model where you have co-located providers building a large campus with hyperscale grade facilities, but offering multi-tenant space and build to suit, as well as potentially leasing some footprint for cloud providers.
Okay, and in terms of some of the challenges, which I think some of them you touched on, but when it comes to new developments, for example, I mean, project finance, I think can be a bit of a challenge. What are those obstacles, and are there ways that they can be easily or at least overcome in some way?
Yeah, so all funding sources come with their own specific requirements, and we can compare some of the features of debt and equity funding, which are the main alternative sources for developers. So project finance lenders tend to assess the bankability of projects by reference to their projected earnings, and that may result in them taking more conservative positions than an equity investor would, because lots of African data center projects don't have fully contracted revenues in place pre-construction, although they may have an anchor tenant. And that may impact on the project's ability to maximize its debt to equity ratio, but there are still advantages to debt finance. So I'd say lots of developers value the fixed costs of funding. So for example, if they can, through project finance, it's relatively common that you would include interest rate swaps together with whatever floating rate may be on the loan, and that effectively gets you close to a fixed cost of funding. And another benefit that I think developers probably do appreciate is that once you're operating, banks tend to, or development finance institutions tend to have relatively little day-to-day interference with the operation of a project. And that, to contrast with equity investors may have more of an appetite for risk than a senior lender would have, but they will expect a number of concessions in return. So they will probably want control rights, board positions. They're likely to want a higher rate of return than the margin would be on a loan. And to the extent that their control rights may extend in certain circumstances to taking over the ownership of other partners within a joint venture arrangement, that's a factor that needs to be borne in mind. One, I would say Africa, we're talking about Africa, but it's an emerging markets consideration that you have when borrowing from DFIs, is that DFIs are very useful. They provide an awful lot of benefit, especially in developing projects in emerging markets, but they are not banks. So unlike a bank, which would provide a number of ancillary services as part of the package when they're providing a loan. So that might be, for example, agency services operating between the lender group, security trustee services, provision of bank accounts. On a DFI funded transaction, those services need to be provided by third-party service providers. That means more parties. Those parties need their own advisors, they need their own lawyers, and they will all take a certain amount of time to bring themselves up to speed on what can be quite complex transactions. Having the extra parties, in turn, will add to the complexity and the volume of documentation needed to facilitate those transactions. So that's something which also just needs to be factored in and planned for.
Yeah, and then I guess we can move on to, I mean, PUE is still whether people like it as a metric or not, it's there. But I guess for the African continent, it's something of a challenge. I mean, clearly the climate is an issue, and then I think you touched obviously on the power infrastructure side. So how big is that challenge, and are there ways that it can be addressed?
So I suppose for the benefit of some of the audience, or I appreciate it's a data center, fluent audience. So a perfect PUE on a data center would be 1, meaning all of the power goes to IT load. So if we look at traditional sites around the world, PUE might be sort of in the region of 1.7 historically to 2. Whereas for a modern tier 3 or tier 4 site, that could be 1.5 or lower, down to 1.3. On an African, if we take the average typical historical African numbers, it's over 2. It's in excess of 2.5 in some cases. And that's often due to things like inefficient cooling and also backup systems and the way in which they operate. But African operators have got evolved strategies for reducing PUE. And that actually can also tie in with what we just touched on with DFI lenders, because often those lenders will have specific concerns in relation to sustainability, which means that they are keen to incentivize their developer borrowers to evolve strategies to increase efficiency and PUE. So we might see that, for example, through climate-adapted cooling design, so the use of indirect evaporative cooling, using heat exchangers, and AI-based, so going back to AI, we do see the evolution of AI-based thermal management to control fan speeds and chillers, and also to leverage the availability of cooler nighttime air. There's the optimization of power infrastructure, so avoiding wastage, and you can do that through the use of smart switching between grid and generators, and possibly also renewable sources. But the key there is to minimize idling losses. Also through the use of renewables, so the use of battery electric storage systems, BESS, and solar PV, and that ultimately can create this virtuous cycle where you can develop a microgrid and you can benefit your neighbors. Site selection is critical, and I think it's not determined solely by where you are, within the continent. So if you're looking to develop a project, I know in Kenya or in Ethiopia, because of their elevation, Nairobi or Addis are much cooler than their surrounding areas. So that's again something you can take advantage of. And then finally, I'd say operational discipline increasingly plays a part, and we see this across infrastructure more generally. So it links to power infrastructure, but the use of continuous energy monitoring, PUE tracking, things that AI can help with, will lead to those incremental improvements.
Okay, and we've already sort of touched upon power infrastructure, both in terms of capacity and reliability, and I guess that is one of the major challenges. But and again, you've mentioned renewables a couple of times, I think. So some countries are beginning to address it, and renewables seem to be at least part of the solution. Just, I guess, how would you characterize, I guess to people not familiar with the region, we just assume there are sort of regular random blackouts, which probably aren't very good for data centers, but to tell us a bit more, give us a bit more detail if you can.
Yeah, that's right. And that is an issue, so grid reliability. But I think in addition to that, that leads to strategies that are often characterized by being expensive. So the use of captive generation, so diesel gen sets, or even if you have availability to some renewable power through it could be either a private wire arrangement with where regulations permit, and again, that's not straightforward across the continent. There is the regulatory picture is patchy, and I guess I would say it's not just power. So when it comes to looking at projects across Africa, there's also connectivity, and land is a big issue. So data centers need fiber routes, they need secure, low-risk land parcels, ideally near urban demand centers. In addition to the regulatory picture around power, you also have regulatory fragmentation because each country has its own rules on data, so how data is managed, which permits are required, what incentives are available, and those can change over time. Also skills and operations, so a shortage exists, I would say, of local technical and facilities management talent, and that's being addressed through training programs and the like, but it's still a factor. And of course, financing. So coming back to financing, FX volatility is a material issue. These are projects with long payback periods, as is typical for infra projects, and that's coupled with the fairly limited, I would say, local debt markets. The depth of and the liquidity of the local banking markets in a number of African countries are quite shallow.
Okay, and in terms of maybe a couple of other challenges, you mentioned the skills shortage, but I think you were talking specifically about data centers. But I guess contractors, the folks that are going to bring the projects to fruition, whether there's enough of those to go around, and also we can't ignore, I guess, the geopolitics of the region. So, some countries, I guess, are more attractive than others. But just your thoughts
Yeah.
on both those areas.
Locating contractors. I mean, I suppose I would say this is true outside of Africa as well. And I think the developers of projects and the operators of projects, especially those who've been there a while, have recognized this. And I think of a project we worked on a while ago where, in fact, the structure of the transaction was such that the debt, which was provided through what they call a sustainability linked loan, included certain metrics in relation to the development of the local workforce that actually benefited the developer ultimately, even in its capacity as a borrower. On the geopolitics, I mean, we all obviously see the news, and news stories don't necessarily paint an entirely rosy picture. But I say this as someone sitting in the UK. I mean, you may recall that the UK Labour Party, in its 2019 election manifesto, promised to nationalise internet service providers. They were going to introduce British broadband. They were going to nationalise Openreach and use that then to provide free broadband to every home and business in the UK. I mean, that's a fairly major geopolitical risk. It didn't come to pass, but there was a real possibility that it would. I mean, that said, political risk in Africa is one of the biggest variables, I think, for investors and operators in the data center sector. And that's coming back to what we've said previously, because data centers are high capex, long horizon, and infrastructure dependent projects. So if we look at regulatory volatility, the concerns there would be frequent law changes. So, for example, on things like data localization rules. So in some markets, data localization rules require critical data to be hosted domestically, and that's a good thing. It's good for demand, but it's risky if those rules shift or if they become protectionist. Also, tax rules may change. Incentives can be withdrawn. Retrospective taxes can be applied. And these problems aren't unique to Africa, and there are well-developed strategies for dealing with these. So I would say engage regulators early. Seek government support letters, or you can get investment certificates in some countries to support the project. Importantly, we see this across the infra space on the continent, working with local partners in joint ventures. That can help an awful lot. With some developers and investors, they also diversify their investments by developing projects in 2 or 3 jurisdictions, so in neighboring countries. And that portfolio effect can reduce the impact of changes in any one country. And you can use, it's potentially underused in some instances, but certainly it's available, is the use of bilateral investment treaties. And the benefit of bilateral investment treaties is that to the extent that the equity funding for a project is sourced from a country that has a bilateral investment treaty with the host country, then that can be used in the event that, depending on the terms of the treaty, unfair or unjust and inequitable treatment is applied to an investment that's owned by that foreign entity. And of course, also the use of political risk insurance, which plays a part and certainly helps to support the commitment of lenders. On the power sector, the fact that you have PPA strategies is also partly there to reflect tariff uncertainty, where even with the long-term renewable PPAs, there's a lot of solar that's used in Africa, but of course that's no good at night. So you still potentially need hybrid systems that take account of the shortcomings of the particular approach that you're using. And where it's a state-owned utility and there's a power purchase agreement in place with them, a little bit like the bilateral investment treaty protections, you can introduce stabilization clauses quite often, which means again that you have protection in the event that there are retrospective changes to the regulatory system that you're working in, or to the rules that have been set by a utility, for example. I would say on coming back to the financing side, the risks, the macroeconomic risks about FX, inflation, Convertibility is an important one, so the availability of hard currency within a country. And we see that quite often where a lot of the capex may be funded using often US dollars, but if revenues are denominated in a local currency, there may be a potential mismatch there, especially with high inflation rates. And a way around that is to have US dollar indexed contracts, even if they're ultimately payable in a local currency. And that then reduces the risk of that inflation mismatch affecting your ability to service debt and to generate returns for an investor. But also then the need to be able to address the convertibility issues arising from a lack of availability of that hard currency is something that needs to be factored into investments. And one way of doing that, depending on the liquidity of the local banking market, is through the use of blended loans. So we sometimes see that there are facilities made available partly in local currency, partly in the hard currency. So if you're buying equipment from abroad, it may be that it's easier for you to do that in US dollars rather than in a local African currency. One thing that can be exaggerated in its impact, I would say, is this issue of corruption. So across the continent, there are various indices that are used to measure corruption within different countries. But in practice, at the project level, where people are likely to encounter this is with delays around permitting and customs, for example, goods being processed through customs as quickly as is required. And that again can be mitigated through the use of local partners. So working in joint ventures with local partners. Transparency in one's compliance system is important. And I think also aligning with local policy priorities. As long as if what you're doing is something which is generally supported on the ground, that's likely to get developers a long way down the road. And the other piece, I guess, is security. Together with corruption, another consideration is security. So be it political unrest or even just vandalism of a site. And that's where due diligence comes to the fore once again. So do the due diligence on the location. Obviously, you might avoid a border area, which is subject to local tensions. But ultimately, as in most places around the world, your first line of defense may well just be physical hardening of the facility.
Yeah, and so I guess there's sort of a fair amount of potential challenges that we've discussed, but despite those, the data center opportunities is significant. I think it's fair to say in Africa. Right now, where is the development happening? Can you give us a sort of overview of where the projects are mainly happening at the moment?
Yeah, I'd be happy to. So as you know, Africa is 54 countries, and we've described the continent as being high growth, but it's heterogeneous. So a few markets, I'd say South Africa, Nigeria, Kenya, Egypt, and probably Morocco as well, will capture a large share of the demand and investment.
And outside of those, I mean, are there any other countries or regions do you think that are slightly longer term opportunities that you can see that might raise their profile over a bit of time?
Yeah, there are. And although those are the core hubs where I think a lot of the investment will go, we have experience of investments in other countries and have advised clients there. And so we do see expansion into countries like Ethiopia, Uganda, and Ivory Coast. And that's largely reflecting the fact that the digital infrastructure demand continues to increase, even outside of those more, I suppose you might say, more obvious destinations.
And I think you may well have, you have sort of referenced this already, but I don't know if you want to say any more in terms of what is being developed, the balance between colo. I think you said colo more than hyperscale, but that,
Yeah.
and then you mentioned edge is perhaps for the future. So just perhaps give us an overview of the different types of projects that are being developed, if you can.
I think that's right. I think edge is nascent. But the key, I suppose that the key motivating factors are ultimately what determines how this will play out. And so really it's, the need for that really high level of power reliability, especially that hyperscalers require because of high density cooling, etc. And also the network connectivity remaining constrained means that actually the kind of the co-location model which can take advantage of the fact that you've got data sovereignty requirements. You've got latency is an issue in terms of some of the applications, on the continent, and that's increasingly growing. And also for those legal and regulatory drivers, that means that, for private enterprise and for government who want to store their data locally, having that co-located model is ultimately likely to continue to be the direction of travel, other than, as I say, the scope for hybrid model growth. So where you can offer multi-tenancy space and even build to suit with a hyperscale grade facility, then that may see an evolution of the market.
Okay, maybe, is it possible to summarize, how exciting do you think is the African data center opportunity? And for those, interested in it, are there sort of some recommendations? Obviously, yourselves, Haynes Boone, help folks, but just any advice you could give people as to, what to do if that's a market they're interested in.
Very much so. So I hope I haven't come across too negatively, because I think this is one of the most exciting frontier digital infrastructure global plays right now. But as you've suggested, it does require carefully sequenced and I would say partnership-driven approaches to succeed. And so it's attractive for a number of reasons. First of all, you've got explosive digital demand growth. Africa's demand consumption is roughly doubling every 3 to 5 years, and that's driven by mobile, fintech, streaming, gaming, social, and cloud services. So smartphone penetration, for example, is rising by in the order of 60% of usage, and internet traffic per user is also skyrocketing. So all of these help to sell the story. And that's coupled with some of the regulatory points we touched on. So enterprises and governments are moving from on-premises to hosted and cloud infrastructure, and that also creates demand for local compute and for storage. In terms of localization, we've seen AWS in Cape Town, Microsoft Azure in Joburg, Google, South Africa, but also coming up in Kenya and Nigeria, are all expanding. And what that does is these anchors de-risk the local ecosystem, and that drives secondary demand. So that then gives you co-location, connectivity, and in future one might see edge. And so even regional telcos, as well as names like Visa, whom I mentioned, SAP, Oracle, Huawei Cloud, they're also localizing their compute on the continent. Then we've got subsea cables and fiber build out, importantly. So new high capacity systems are radically lowering latency and cost. And each one of those cable landings has the potential to catalyze a metro edge data center cluster. So be it in Mombasa, Cape Town, Lagos, Luanda, they're all examples of where that's happening. And I would say you could, on a lot of the structural aspects, you could say there are clear tailwinds. So Nigeria, Kenya, South Africa, Egypt, and Morocco are all forcing local data hosting. So they have data sovereignty rules, which will help to drive the growth of that market. And coupled with that, you have investors like the DFIs who I mentioned, and infra investors, so institutional investors who are funding that ecosystem. And there are strong reasons for that. The potential returns on IRRs on a well-executed project that has power resilience may be in excess of 15%, which that takes you into that takes you above the hurdle rate for investment of a substantial part of the infrastructure investment market. And you can see that there's under penetration across the market. So just again, throwing some numbers in there, Africa still accounts for less than 1% of global data center capacity, and that's with over 17% of the world's population. So that imbalance alone suggests the next 10 to 15 years of potential expansion is available. And I'd say in terms of, what we're seeing, so, what people may take as being a guide to the market and what we're seeing from others is that co-location providers, as we've mentioned, are probably the majority of the market. So they're building and operating carrier neutral facilities. I think hyperscaler built to suit is it is an option. Clearly, we know that hyperscalers are on the continent, and you can do that as a developer by partnering with a cloud provider. I would say, as we touched on, that the distributed data center model, or edge, is still nascent. But many successful entrants do blend these models. So having an anchor tenant on a campus, or having a hybrid project with a hyperscaler, and then filling the rest with co-location or interconnection tenants. All of those variables work as a model. But at the risk of repeating the point, it is important to partner intelligently. So local partners can help you to navigate regulations, help to obtain permits. They can help with land acquisition. They can help with political relationships. All of these are important elements, but also utilities. So not just investment partners or development partners. Utilities or renewable energy partners can help to co-develop or contract for renewable energy through long-term PPAs, which crucially provide cost stability. Telecom and fiber operators, I would say again, are an essential feature that has to be on the list of people that you need that for low latency connectivity. And then I guess the DFIs, again, are extremely important because of the clout that they carry. The way that a DFI operates is that they're treaty organizations. They're created by treaty, and they will generally have lists of jurisdictions that they will lend into because of the relationship between the founding members through the treaty structure that creates those DFIs. So that means that they're far more influential within a country than a commercial bank might be, for example. And then finally, I suppose it's important to pick markets strategically. So tier 1 is probably South Africa. I'd say tier 2, then you've got Nigeria, Kenya, Egypt, and then you're more into frontier markets, probably beyond that. But, they require patience. I think that's true to say, but we do still see the rollout of projects in those markets. And I think they're increasingly attractive because of the returns that they can offer.
I mean, it's been great to chat, and thank you so much for you've shared some brilliant insights into what's going on in the continent. And it sounds as you say that stat, if I got it right, sort of 1% of the global data center market, but 70% of the population. That sounds like there's got to be some catching up. So that's quite exciting. But Conrad, really appreciate the time you give me. So thank you again.
No, it's a pleasure. Thank you for the opportunity, Phil. And I very much enjoyed speaking to you.
Thank you again.